Are you looking at opportunities to invest in real estate overseas? Presenting you the top 10 best countries to buy real estate and get high capital appreciation opportunities for investors. Morocco is an excellent real estate market for foreign property investors. The country offers affordable property options and a high standard of living. With a good banking system, foreign investors can be confident that their interests are protected. The taxation system is friendly towards foreigners who are not subject to double taxation. Rental income tax in Morocco is 10.7, which brings rental yield to about 5.52. The typical home value of homes in Morocco is $140,232. This value is seasonally adjusted and only includes the middle price tier of homes. Next comes Colombia. Colombia makes a good choice for foreign property investments, seeing that it is a market that is constantly putting out innovative solutions. The real estate market is supported and driven by steady economic growth over the last decade and a doubling of GDP. Investors in property market have been generating profit due to a good rental yield at 6.51. The exchange rate has more than doubled in the past 7 years. Although prices have steadily increased, it's still a great time to spend dollars in Colombia. Real estate in Bogotá continues to be a strong and viable investment option for those interested. Over the past 13 years, Colombia's real estate market overall has seen rising prices and impressive growth for most of the country. This growth slowed after 2018. However, for Bogotá, rates continue to rise. Next comes Indonesia. Indonesia is one of the best real estate investment countries, favored by a strong economy and the availability of natural resources. People who invest in real estate in Indonesia have a high chance of getting good returns. The domestic market is highly profitable since locals are highly likely to take a property on rent. In this densely populated country, rental yields are always rising and stable. The rental yields are as high as 8.61, and with an average cost of $1,200 per meter in the city center. However, it is not easy for foreigners to buy property in Indonesia, but leasehold arrangements are an easier way to navigate the real estate market. Next comes Turkey. The Republic of Turkey has become a magnet for investments in land, houses, and other real estate options with its central location and vibrant economy. The average housing price in Turkey is about 3,800 Turkish lira, 300 per square meter. But Turkey consists of 81 states, so the real estate price may differ from one area to another. In the Real Estate Index and Regional Report of 2021, the average price of a 100 square meter house purchased in Istanbul was between 490.700. Turkey acts as a bridge between Europe and Asia and is a melting pot of different cultures and religions. The country passed laws that made the country a desirable destination for foreign investors. Foreigners can now go through a simplified process to acquire Turkish citizenship through real estate investment. Next comes Australia. Australia has a vibrant economy and provides good living standards to its citizens. Senior analysts at industry research firm Ibisworld have predicted that in 2020-23, Australian house prices will fall by 5.2%. The predicted fall comes after housing prices surged by 18.1% in 2020-22, the largest annual increase in Australian history. The country has continuously been well rated as having one of the highest rates of prosperity. These are some of the reasons the country draws real estate investors eyeing potential growth and good returns. Plenty of wildlife areas and other tourist options, as well as farm lands, are other attractive options drawing interest to the country. At 5, we have Canada. Canada is one of the big economies in the world, which makes it attractive for investors in the real estate niche. Investors accounted for 20.6% of home purchases in Canada by the second quarter of 2021. A Bank of Canada study showed, with investor activity highest in Ottawa. Royal Bank of Canada is predicting the aggregate benchmark price will decline 2.2% nationwide in 2023, down to $776,000. There are good property options and good standards of living that make the country ideal for real estate investments. Besides its low population, Canada is well known for taking a pacifist approach to different issues and being welcoming and tolerant to immigrants and visitors. Paradise Developments provided an overview of the best neighborhoods for real estate investments in Canada. Next comes United States of America. Thus is considered the best country to invest in property. The housing market is coming off a year in which U.S. home prices soared an unsustainable 18.8%. By the spring of 2021, housing inventory was down 32% from pre-pandemic levels. With buyers outnumbering homes for sale, they had no choice but to offer over listing price if they wanted to win. Also, home listing site revised the 2022 home price growth rate up to 16.4%. A number of cities in the country have ranked highly as the best destinations for foreign investments in real estate. Cities such as Los Angeles, San Francisco, New York, and Washington, D.C. are safe bets for investors looking for consistent and stable returns on their capital. Another of the popular real estate investment destinations in Europe, France is the best country to invest in real estate for investors who are looking at a long-term return. One unique characteristic is that foreign investors can get in-country financing, which is rare for many other countries. Interest rates for mortgages are low and refinancing is possible, with an up to 85% loan-to-value. Coupled with the fact that rental income tax is markedly lower than other European countries, investors will be happy to put in their money. The French economy in 2022 is forecast to rebound strongly from the COVID-19 health crisis. House prices are predicted to increase by 3.5% across France during 2022, and French property sale transactions will continue at a healthy rate of 1 million for the year. Germany is a safe bet for investors seeking opportunities in the European real estate market. Germany is a superpower with a roaring economy and financial might comparable to other leading nations. The German residential real estate market is poised to register a CAGR of 6.1% during the forecast period from 2022. The average price of apartments rose by 12% in the fourth quarter of 2021 compared to the same period of the previous year and denoted the largest price increase since records began. At the end of the first half of 2021, the transaction volume for residential properties and portfolios in the German residential investment market totaled around €10.3. The low cost of living and income tax rate makes it an ideal real estate investment choice. Home prices rose around 10% last year and were forecast to rise 6.3% this year, according to the Feb 10 March 2 Reuters poll of 16 property market experts. That pace was expected to slow to 4.5% next year and then to 2.8% in 2024. At number 1, we have United Arab Emirates. The United Arab Emirates is a tax-friendly country which will provide high returns for real estate investors. There are no income tax laws, which means investors are exempt from paying tax on accumulated rent. The rental yield at 5.19 is among the highest, which in effect means you can get maximum benefit from your investments. Foreign investors have a wide variety of properties, especially in Dubai, in which they can put their money. According to real estate consultancy Astaco, the UAE will see a supply of 38,500 apartments and 3,800 villas, almost similar to the previous. Dubai will account for a large chunk of it, with 30,000 flats and 3,500 villas this year. Similar to the previous year, some of this is expected to be delayed or will eventually spill over into next year. Attractive areas for investors in Dubai include downtown, Palm Jumeirah, Marina, and International City, and these have supported the claim of the UAE being a premier destination